Hey everybody, it's been a while since I made a video. I apologize, I've been a little bit busy, but I'm going to be going over a bunch of different topics in sort of like a quick fire, rapid fire sort of thing, just to give my general point of view. None of this is financial advice, please do your own research. My views change constantly as I gather new information, um, and I haven't done enough research on a lot of these things. I just sort of went over it and I just wanted to share my opinion on things because I do think that they're somewhat important. But yeah, I didn't really have the time to sit down and gather my thoughts, so this is unscripted, okay? This is just things on the top of my head. So again, none of this is financial advice. Please do your own research. Everything I've said is subject to change as well, okay? So when you look at the Hang Seng, it looks like it's bottomed around here. There's been speculators that believe that the Hang Seng has like a plunge protection team that'll come in and buy the Hang Seng anytime it dips below a certain number. So it looks like it's dipped around here in Q1, and you have some other confirmation here of other Chinese stock markets as well, where it's sort of dipped around Q1 and it's been bought up. So, that's sort of a bottom, right? Where you look at that there's some people or entities willing to step in, whether it's on private sector or not, that see value here. Okay. With NIO stock, I couldn't say the same. Though when you look at companies probably within the Hang Seng like Baidu or Alibaba, you may see some sort of reflection of that. So yeah, you could either you could look at that, right, and try to figure this out. But yeah, this is an all-encompassing index, so some companies you'll see, some companies you don't. But yeah, for me personally, if I were to place bets, I would wonder if it's not a bad time just because there possibly could be a bottom, right? For some companies, at least based on the Hang Seng. And if I'm looking, for me personally, when I'm looking for value and I'm looking for a good deal, it's really hard for me to want to invest in the United States at this current moment. I mean, you can find small cap or med cap or micro caps, for example, that could benefit from lower interest rates because they're capital intensive and borrow tons of money. They're not profitable. And while these blue chip companies can acquire capital much easier, they can borrow much easier. Yeah, I don't know. I would wonder if lower interest rates, which could happen soon, maybe, you know, institutions may want to take profit here and start investing in companies that benefited from lower interest rate environments. But I don't want to get too much into that just because it's something I would have to do a long video on because there's just so many nuances and so many things to consider. So, I mean, I'm just sharing my bland point of view, my general point of view that yeah, it's really hard to want to invest in these companies. So when it comes to like Chinese and US relationships, any kind of tensions that we have, like military or whatnot, I think it's all baloney. I mean, it's either you have World War III and everyone dies due to mutually assured destruction through nuclear bombs or not. So I think there's probably going to be a win-win solution. It's very apparent when you look at your politicians and how they go on about China. It's never really too aggressive despite the sable rattling. So yeah, when you look at all these companies like AMD or Nvidia or Amazon, like 70+% of retailers, I believe, are from China. Same thing with like AMD. A lot of the supply chains and consumers are from China. Microsoft, there's a large customer base in China. Nvidia too. Walmart. Basically, all the blue chip United States companies that we tout as American blue chips are heavily dependent on China more than not. And personally, for me, I believe that China is in a position of strength versus the United States. We are gaslighted to believe otherwise, but if one country owns the means of production and diversifying its supply chains and its relationships and doesn't benefit from a colonial structure as much as the United States, then odds are, China is in a much better strategic position, which is why the United States can't get what it wants from the China, because China is in a position of strength in a lot of ways. Now, the United States is strong in some aspects, but based on how the United States is a debt-driven economy that needs asset appreciations, I really doubt it. And if you have these companies diversify from China, which is impossible, yeah, what does that mean for your S&P 500 or your Vanguards, right? These ETFs that, a lot of your American citizens in the global society benefits from in their retirements. So, yeah, we're really in a financialized economy, but, you know, it's very much of like a paper tiger. While the United States, while China owns the means of production. So, I would wonder, like for me personally, I find it very difficult to want to invest in the United States. But when I look at value in China, for example, it seems like it's much easier to buy the dip. That's just my opinion, not financial advice, okay? I hope you understand what I'm saying. Now, this doesn't reflect small cap, med caps, and other companies, but your blue chips and things like that, yeah, it's very apparent here. But my views when it comes to small caps and mid caps or micro caps, hey, do they benefit from a lower interest rate environment? These are things that you would have to look at and do your research on whether your company does, right? Like a smaller company may need to, they could benefit from lower interest rates because they can borrow money at a cheaper cost, they can refinance their debts, they can expand their business, all these types of things. So I'm not going to talk about it too much here, just something to consider for me when I'm dumpster diving, okay? So more short selling curbs to stabilize the stocks. I'm not going to go into this too much, but I think it's a very good sign that shows that the Chinese securities regulators are really trying to boost up the stock market in China. And there's a big difference between the United States and China. Well, where China, they invest in real estate or hard assets and homes and properties and things like that. But the bubble had popped, so China's economy is doing fairly well despite that, and they are getting support by the government. Another thing to consider is that even if the Evergrande bubble popped and all these other real estate companies have not been doing too well, I think I saw the Evergrande stock. It recovered as well, and their bonds are not doing too bad either at this moment. So, I would wonder if that's an indicator that the markets may be seeing more positive things moving forward, right? Especially if you are relying on heavy financing and things like that. But yeah, it seems like the Chinese security regulators really want to help the Chinese stock market. If it wasn't apparent here a couple months ago, or the other moves by the CSRC, they've been making a lot of moves for the past 3 years to make things more friendly for investors. Yeah, it's very apparent here. It's very apparent. And I know they had these talks a couple months ago, but it seems like they're really firm on this about how curbing short selling, and that way it encourages more long-term investors rather than shorting. And shorting, in my opinion, is good sometimes because it helps it helps clear out bad companies, right? If there are companies that are doing really bad and they're doing scandalous things, then it incentivizes people to research and call these companies out, and then have a financial gain off of it. However, short selling can be abused tremendously, and I think in the case of Chinese equities, not financial advice, I think that Chinese companies have been victims of short selling in a very disingenuous and harmful way, where it's not okay and it's not very conducive at all. It's very harmful for these companies, very unfair too. So sometimes it's good. In the case with China and short selling, not good. It's abusing Chinese equities. So now we're moving on to a little bit of politics and recent news. I did watch the presidential debates, and there's a few comments I want to say. Whether I think Trump or Biden, one or the other, is better for China or not is hard to say, because they both come with their pros and cons. And it depends how you look at it. So these are some broad generalizations I would like to point out. If you think that a weaker United States is good for the country, then Trump is probably going to give you a weaker United States. At least sow social division and bring more power to certain industries that rely on fossil fuels and things like that. Maybe he may be more willing to talk with other. He may kowtow and bend to foreign, I guess countries we deem as foreign adversaries, while also trying to withdraw from certain things that boost our credibility and strength amongst the international community in some aspects, like NATO, for example. While Joe Biden is more willing to stay in NATO, he's more willing to be a war hawk. He's more willing to be aggressive towards China. But at the same time, both these presidents are very, they're very, I gotta say, they're both very far right, in my opinion. On a global stage, like these two presidents are very far right. And that despite their some differences, they're very much alike. So I couldn't say which one is necessarily better or worse for Chinese equities, right? Because I couldn't. I would have to sit down and really think about which one is better for Chinese equities. But under the DNC, under the Democratic Party, you have people like Gavin Newsom who are more willing to work with China, and a lot of the blue states, a lot of the West states, they do benefit from trade with China more immediately than other parts like Texas that are more self-dependent. So yeah, this is why I can't have this conversation now. It would take too much time, and it's something I'm going to have to do a lot of research on to truly determine which president, which party is necessarily better for Chinese equities or not. So yeah, I cannot give an opinion on this too much. But what I can do is give a surface level analysis on the presidential debates. And for me personally, after watching it 2 times, their stance on China was pretty weak for both of them. Like I know there's a lot of saber rattling, but for the most part, their at least upfront vocal stance during the debates were not too hard. It wasn't too negative. It was you want to appeal to your constituents, but you also want to have a tough on China stance and view. You also want to boogeyman them to alleviate domestic issues, but at the same time, it wasn't like they were too hard on China either. But yeah, so maybe I'll make a video on that to actually determine which one's better or which one's not, but this is not it. So I also watched the Joe Biden NATO conference that recently happened. I think it was today or yesterday. I ended up watching it today, and I watched it twice. And I have to say that despite some of his talks when it came to international relations, Joe Biden was not very hard on China either. I know there was some posturing, I guess, but for the most part, it's not like it's kind of like that skit from Key and Peele where they're both talking horribly about their wives, but they're never going to say it in front of their face, and they whisper it amongst each other. It was kind of like that. So yeah, when it came to their stance on China, it wasn't really that powerful. It was very weak. But when it came to NATO and his views on NATO, you know, I think that when it came to that, it was very hard to say because a lot of NATO countries are willing to work with China too, and they're eager to. So it's really hard to determine which one's better or worse. I'm gonna have to do more research and come to a better conclusion. But overall, I don't think they're that hard on China. And if you think that weakening NATO is a good thing for China, then that's something to consider as well. But you know what? I don't want to go into that too much. So yeah, they weren't both during the presidential debates and his recent press conference at NATO. It wasn't too bad on China, but of course you need to do way more research on this. It goes much further than this, right? So this person is speculated to be the next president of the United States in 2024 or by 2028. And do I think he would be a good president? I couldn't say that, right? But I do know that he's pretty much the ideal ticket. He's a white dude. He's articulate. He can speak well. He's very witty. He's charismatic, and you don't have to agree with him, right? You don't have to like him. I don't really care about that too much. I don't care who you believe in. I don't care personally. I'm just an opportunist looking for how to make money in a market, depending on how things move in our world. But overall, yeah, this person could very well be our next president or the next future president, and I think he has the right. He's very marketable. Okay, he's very much marketable. Here's him and Joe Biden, And he has a very positive stance on China. Let me see right here. I mean, just to discuss a few things. Gavin Newsom met with Xi Jinping I think it was late last year in Q4, around October. He met with Xi Jinping. He met with Chinese politicians. He said he praised the BYD. He likes Chinese electric vehicles. And till this day, there's a very strong Chinese community and Asian community in places like San Francisco, California, Hawaii, and a lot of the West Coast states. And if you actually just do American history, the West Coast states have always benefited from trade of East, whether they're plundering or imperializing them, or they're doing trade now, right? So, he seems like he's very, this person could very well be the next president, whether people like it or not. And he's very open and willing to work with China. I have a few quotes here, things like, Gavin Newsom said, "Divorce is not an option. The only way we can solve the climate crisis is to continue our long-standing cooperation with China. As two of the world's largest economies, the work we do tougher together has felt countless communities in both the Pacific sides." So, yeah, I don't want to get into this too much, but with consideration to the international community goals with climate change mitigation, which is actually really important despite people downplaying it, you really do need cooperation, and climate change is a big deal, and it's very apparent of how China's handling things along with the international community. So, when you think about like the United Nations Sustainable Development Goals, the UN Charter, we do have climate mitigation goals that we're trying to meet with through organizations under the UN, like the Paris Agreement. So, yeah, I do think that you if you're into investing in electric vehicles or foreign relations, you may want to look at the United Nations and the Sustainable Development Goals and the UN Charter and go over that along with the Paris Agreement and the international community and their goals. So, this person could be the next president. If Joe Biden isn't marketable by the Democratic Party, then it's very possible that they might want to market Gavin Newsom. And I think he would do a good job, especially for me who invests in Chinese companies. He's a good pick. He's very marketable. Whether you like him or not or agree with how he's governed California, he's very marketable. Let's be honest, because people love their white, male, slick politicians as the wit. And unfortunately, this country's a little racist still. They're a little bit sexist, so they might not like Kamala Harris or the other options too. So, yeah, very solid chance, honestly, very solid chance. At least relative to others, but that doesn't mean I think he's going to win necessarily, okay? And it's not even about that. So, another thing I'd like to go over is just consideration to interest rates. It seemed like Jerome Powell was alluding that they may be cutting interest rates in Q4, which is a very positive sign, again, for the things I discussed earlier, especially for, more things that people would consider a little bit more speculative. Companies that borrow money, have interest, have tons of debt, it'll definitely help them out. So this is something that happened last month. I believe the European Central Bank lowered their interest rates. So this is a good sign, because once you see like the European or Canadian banks start cutting interest rates, then it encourages other countries like the United States or China to cut their interest rates as well, so they can remain competitive in their exports, so they can depreciate their currencies on the exchange rate as well. And it allows for more easy money policies, because if you can't, it would be really difficult for one country to cut interest rates because they feel like their economy is slowing down, but then another country doesn't. They would have to respond accordingly to what their country needs. So if China, for example, is a very export-driven economy, then if the United States, European, and all these other Canadian, etc. countries, they cut their interest rates, then China, in order to stay competitive in their exports, may have to cut interest rates too, because otherwise your Chinese exports would be too expensive in comparison to domestic production in these countries. So yeah, when it comes to Chinese overcapacity as well, I think it's all baloney. It's just a saying because China can access this large economies of scales. It can produce things at a mass level at a very efficient cost relative to other countries. They own the means of production, supply chains, and it's really hard for like European and United States countries or Japan to keep up with with China's efficiencies, right? So you can call it overcapacity, but it undermines the economies of scales that China has and the power that they have. So, do I think these tariffs are sustainable? No, I don't think so. I think that these tariffs are just posturing. I think that based on my own understanding of the United States economy, there's no way that we can have domestic production keep up with China. And even if we were to build our own industrial base, which we don't have, it would take a very, very long time, like too long, to the point that it doesn't even matter. China can still outcompete the United States in a global market share. And China owns things like our supply chains when it comes to like rare earth minerals, minerals essential for batteries and components. So, again, like we can't really do that. I think at the very end, we're gonna work with China no matter what, and it's not gonna be like that. Of course, you can set up tariffs to help buy your companies in America some time before that happens, but it's inevitable. So I will probably make videos later going more in depth on each of these topics, or not. I don't know. We'll see. But each one of these deserve a very long discussion. So yeah, again, like if the United States cuts interest rates, if all these like Western allies cut interest rates, Japan had cut interest rates already. Yeah, you might see China lower their interest rates as well, which could help domestic consumption, maybe their assets, things like that. So yeah, a little bit more of overcapacity though. I think I gotta be honest with you. California and a lot of America is going through a really hard time right now. So the best thing we can do is have this person run for president because if he's willing to cooperate with China, then China can bring a lot of their companies and direct investments here, and they can start building some of their industrial base here, and they can have how China goes to other developing countries or countries to offer the Belt and Road Initiative or the BRICS. The United States should join the BRICS in a sense. Do you see what I'm saying? Like the United States could benefit a lot, especially our Western states that have capital flight and business exoduses. So yeah, I think this person could very well be the future president, and there's no real way that California can really fix itself domestically without foreign intervention, which could be done through China. And I think this is probably what's going to happen. We're going to see more economic relationships between like the Eastern Hemisphere, which is China, and the United States. And I think that China will bring a lot of their electric vehicle companies, their smart technologies, green technologies, jobs, and opportunities. And it'll definitely help the United States, which is currently in a slowing down economy. So, yeah, I do think that the United States really does need China a lot. So, yeah, that's all I really want to go over today. Each of these topics really deserve a longer discussion, but again, I didn't really want to do that right now. So none of this is financial advice. Please do your own research. If you vote based on someone's party, then it's something to consider moving forward. But yeah, with that being said, if you have any questions, maybe that's a chance where I can actually articulate myself more and think about things. But this is just a broad, general point of view, surface level, unstructured video where I want to give my quick takes on things, okay? So none of this is financial advice. Please do your own research. Everything I've ever said or anything I will say in this video is a joke. It's not financial advice. I'm not a professional, okay? So with that being said, I hope you all have a great day, and please feel free to ask questions. Thank you.